please, by all means, keep on using that questions box and let me know if anything's on your mind. If you have any specific questions on the chart we're using, on the market, on my analysis of those markets, and of course on those Nadex contracts that I will be putting on today, I'll do my very best to answer those questions towards the end of today's webinar. Today's session is scheduled to run for about half an hour. However, if there are questions afterwards, we're happy to extend that session. No problem there at all. And of course, before we get started, we do have our usual risk disclaimers, so please take a moment of your time to read through those carefully and make sure that you're comfortable with them before continuing with the webinar. Essentially, this says that trading, of course, involves risk, and you should understand these risks and the instruments you're using before you are getting active on the market. As neither Trader's Position nor myself are investment advisors, nothing that we say should therefore be considered to be actual investment advice. All examples are shown for educational purpose only, especially true for the live part of today's webinar. We will be having a look at the live market, seeing what the markets are doing right now, and I will be putting on trades on Nadex, on the Nadex platform. However, please be absolutely sure, I just want you guys to see how easy it is to place those trades and what are some of the thought process, ideas, and thinking that I'm doing when I'm picking those contracts. It's just an example. It's not that I would put on those trades, those specific trades in my own account. It's just for demonstrational purpose. We're trying to balance both the long and the short trades just to give you an idea how you could play both sides. It's never a trade recommendation. So please keep that in mind before continuing with the webinar. Just because I click submit order, we do absolutely not suggest that you do the same thing. It's your money, you've worked very hard for that money, and therefore you should always own that trade that you're placing. Here we have a further risk warning, this time coming directly from Nadex, so have a look at that one as well. Trading on Nadex involves financial risk and may not be appropriate for all investors. The information presented here is for information and educational purposes only and should not be considered an offer or solicitation to buy or sell any financial instrument on Nadex or elsewhere. Any trading decision that you make are solely your responsibility. Past performance is not indicative of future results. Nadex instruments include forex, stock indexes, commodity futures, and economic events. Nadex binary options and spreads can be volatile, and investors risk losing their investment on any given transaction. However, the limited risk nature of Nadex contracts ensures investors cannot lose more than the cost to enter the transaction. Nadex is subject to US regulatory oversight by the CFTC. Alright guys, I hope you're all okay with this, and that's about it. Let's just get started. Today's agenda, building your own trading strategy using technical analysis. I want to show you briefly the way I'm looking at those markets, the indicators I'm using to identify potential trading opportunities, and identify potential long and short setups in the markets right now. Market scenarios, possible outcomes, and setups to consider, and how to trade those setups, and your trading strategies with Nadex binaries and spreads. Market moving news events, and this is the way I want to kick it off today already, Ms. Yellen gave a speech recently once again, and during that speech she announced that it might not be wise to wait long for interest rates. I can't put it that elegantly as she put it without saying something meaningful, but she said the time that maybe some interest rate decision might approach might be shorter than expected. And of course, with a news like that, the markets sure enough followed suit and reacted to that. Maybe some kind of announcement, and I want to have a look at what those markets have been doing since that announcement. And here we're looking at euro against the US dollar. Of course, one of the major markets to be impacted are those interest rates markets, the notes, the bonds, and so on. But of course also, every time interest rates are changing or are about to maybe change, there's always an impact from a macroeconomical point of view on the forex, on the forex markets and on the exchange rates. And so I would like to have a brief look today at what the US dollar is doing against several other currencies. And I would like to kick off here with the euro against the US dollar. And once again, you know, I always like to start my analysis with looking at the higher time frame, seeing what those markets are doing on the larger scale. And by now you all should be able to see my chart here. Looking at the monthly chart on the Euro-US dollar, you can see we are still coming from this long downturn. Since then, we have had a somewhat sideways phase. However, just recently, during the month of January and December, we established new lower lows. We now just have pulled back a little bit more here to our moving average sell zone. Those moving averages, 200, 50, 20, and 10, have now just fallen back into place for a downtrending market. We don't see yet that fanning pattern that we're looking for this fanning pattern that we perfectly saw here during most of 2015. Definitely too long, that sideways phase that was established here 2015-16. However, out of that range, we have broken now down to the we have broken now out to the downside. And now this pullback that we saw just took us here very closely to our sell zone. Overall, the picture and the vibrations that I'm getting here from the monthly chart are definitely more to the downside. Obviously, for February, it's now a pretty large bearish candle setting up here, so the overall picture here is quite bearish. Looking at the weekly chart, we can see that we have started to see this fanning pattern here, and now we've just pulled back, and now big red candle. We're looking for small red candles here for potential short setups here, but the overall picture here pretty bearish. And now the action of this very bearish action of last week is now just being continued, at least up until now this week, and the euro is getting weaker again against the US dollar, and price is moving lower. So monthly chart is pointing downwards, the weekly chart is pointing downwards. And if we have a look at the daily chart, we can see that, yes, this was a nice uptrend. We already have seen that the moving averages have started to look positive and maybe some early signs of springs. However, the most crucial part for me on that chart is here, that bearish candle here on the 30th of January. That was a new swing point low. This was a higher low in this uptrend. Remember, an uptrend is just a series of higher highs and higher lows. And we've seen this series of higher highs, and we've seen that series of higher lows. And at that point in time here, just 2 days ago, well, 3 days ago, we have broken below the low that has been established here on the 30th of January. And since then, we are clearly making now a new lower low. So the trend has definitely changed. It's not yet a downtrend. I'm not clearly seeing this lower high that I would be looking for. You might be inclined to call that a lower high, but overall, more downward pressure. It's definitely no longer an uptrend since we made a new lower low just here 2 bars ago. So the picture here clearly is pointing to the downside on pretty much the daily, the weekly, and the monthly time frames. And what we can do now is that we turn to lower time frames and see if we're getting potential setups there. I always want to have as many time frames as possible in agreement with each other. The picture I'm using for that is if I have 10 people pulling at a very heavy object and everybody's pulling in a different direction, that object won't be moving. However, if they all align and pull in the same direction, they have a decent chance to move that heavy object. And that heavy object obviously is the market. And if all those different time frames are showing me that same picture, are pulling in that same direction, there's a decent chance that the market might be doing what those different time frames tell me. Decent chance means I never know for sure. Even if my analysis is spot on and I do the best I can, I have my best day, nobody knows what the market is doing. The only thing that I can do with my trading strategies is stacking odds in my favor. With every factor that I identify, with every time frame that I'm looking for, and for example with this 15-minute chart, yes, we see that fanning pattern. We see the Euro-US dollar has fallen, is pulling back. We're sitting here on top of some pivot points, bearish candle close to the sell zone, setting up, pulling down. Those are a lot of factors suggesting the price might be going lower. It's not the perfect setup. I'm not near the sell zone on my hourly chart or the 30-minute chart. However, I have more things going for a short setup than against me. However, I never know, and because I never know, I have to make sure that all my trades are comparable and that one bad trade is not able to wipe out my account and completely kill the potential profitable trades that I could have done, maybe the last 10 profitable trades. I must not, one losing trade, wipe out those. And this is why risk management, proper position sizing is so crucial and important. You must make sure that those trades are comparable from a risk level, from a position sizing level. All right, but the big picture that we're getting here is 2-hour chart looking bearish, 4-hour chart is looking bearish, the 8-hour chart is looking bearish. Here the 15 minutes as well, 60 minutes as well. So you might be inclined to think, well, if everything is looking here to the downside, why not consider a potential short trade? And just for the sake of demonstration, I want to do that right now. And you see, I'm already here in the natural gas section. That's the hint on the major market we want to be focusing on next. But right now, euro against the US dollar, let's head over to those forex binaries. And I'm going here for euro against the US dollar. And let's just have a look here at the daily for the 3 p.m. expiry cycle. And let's just make it just a second. Let's make this 15-minute chart larger, and I will pull over this one, and so we see where price is and what price might be doing next. Now, you see, I started not by looking at the Nadex contracts first. I started to look at the markets. And for me, this makes perfect sense. I always must have an idea what I want to trade and why I want to trade it. First, I have to identify the potential setup. And only if I see that setup in the market, then do I decide, okay, how do I want to trade that setup? I could trade that setup now with spot forex. I could be trading futures. I could be trading an ETF. Or, of course, here at Nadex, I can use those innovative Nadex contracts like binaries, like spreads, to create a perfectly risk-defined position and make sure that my risk management and my trade setups always spot on. Now I want to, and only then, if I know I want to trade this market and I've realized, I've come to the conclusion, the best instrument to implement that strategy right now would be, for example, here a forex binary. Next thing, I have to decide, okay, what could be a potential expiry cycle that is working for me? You see all those contracts that I've picked here, 3 p.m. Those still have 2 hours and 46 minutes left. In 2 hours and 46 minutes, that's when this option contract expires. And then we will have a look at if the price is trading above the strike price that we see here. And only then this option settles. And this is where the binary nature of those contracts comes into play. Binary just means it's either trading above the strike price or it's trading below the strike price. If it's trading above the strike price, this option will settle for $100. If it settles below, or if the price of the underlying is trading below the strike price at the point of when this option expires, this contract will settle for $0. Binary, you just have two states. Either it's worth something, something means $100, or it's worth nothing, $0. Now, which contract could we be trading here right now? And again, this is really just for demonstrational purpose. I do not suggest that you take those trades. It's just for demonstration. One nice thing to keep in mind is those binaries which are trading now very close to the strike price should have a price very close to round about 50. And you can see, if we're looking here at this 10560, 10560, 50. Very close to where we're trading right now. A little bit in the money. This is why the contract here is trading for 60.25 versus 66.50. The closer to the money that contract is, the closer that price should be trading to 50. Chuck is asking, and thanks for that question, why not trade the 12 2 p.m. strikes or the daily 7 p.m. strikes? I haven't picked that expiry cycle for a specific reason. It was just one thing. Very good point. You have to balance how fast is this market moving. This option here settles in 2 hours and 44 minutes. You have to decide how fast can this market go. And if we just pick a strike price like that one here, let's just trade this option here at the money. I'm just selling now 2 contracts here. And you see, I'm selling those contracts for 60.25. I just have 2 hours and 44 minutes left until this option expires. I'm just submitting those orders again. It's definitely not a trade recommendation. It's just that you see how easy it is to pull on those trades. Why did I pick that strike price here? Well, it's trading at the money. There's a decent probability from the mathematical point of view, pricing model underlying those options, that this option contract or that the market could close and settle at expiry below this strike price. Now, Chuck has been asking about the 2 p.m. strike prices. Why not look at those? Let's have a look here. You see, this contract here just has 1 hour and 43 minutes left. How fast do I think that this market is? How fast do I think the market can drop even further, or the market might recover? You might now just say, wait a minute, Philip. I don't think that's so bearish what you're showing me here. I think I'm taking a contrarian position. I want to be long that market. All right, if you think you want to be long that market, the question is, within those 1 hour and 43 minutes left, how far could this market retrace? You could now say, okay, the market already traded back to 105.80, so maybe it's retesting this level. So let's have a look at, for example, this contract here. You think within 1 hour and 42 minutes, at that point in time, we will be closing above this level. Well, if that's your gamble, if that's your assessment of the situation, you might be inclined to consider buying this contract here. And you could now buy this contract for $9.75. You see, the market has to travel a bit, and it's now just about 100 minutes left until this option expires. And the mathematical model underlying that pricing currently gives that option just a probability of about 7.5% that this option will be worth something, will be worth 100 at expiry. So this is why that option is currently so quoted cheap. You're risking now with 2 contracts $19. However, if the market settles above the strike price of 105.82, your maximum profit is 181. And that is a very important point here with those Nadex contracts. You see immediately when you raise that order, how much money can you lose? How much money is at risk? And your losses cannot exceed what you're risking here. Your only and very crucial job as a risk manager trading those contracts is make sure that this maximum loss is perfectly in line with your personal risk management plan. Don't go crazy. Don't try to bet the farm on any one trade. It just doesn't make sense. Stay small, stay humble, and most of all, stay consistent. That's the recommendation I can give you guys. You want to make sure that all your trades are comparable. For example, this is just my colleagues that trade with position and myself. We have found, also talking to many other successful traders in the market, going with about a risk of 1% of your account size is pretty much in line with what many successful traders are doing. So let's have a look here. In this demo account, I currently do have about $25,000. And with those $25,000, 1% risk would equal about $250. So if I wanted to trade this setup here, I'm not recommending it. For me, this looks more like a short setup, but again, your assessment might be completely different. To make this position here perfectly in line with my risk management, I could be risking. I'm just increasing the position size here now until I can see I want to risk about 1% of my account. And if I traded 19 contracts here, I would be risking $242, which is perfectly in line with 1% risk of my account here. And let's make it 20 now. And the maximum profit on that trade would be about $1,700. I'm just placing that order now. Again, it's not a recommendation. It's really just putting that order on, and let's see what the market is doing next. You see, I placed a short position in Euro US dollar in one expiry cycle, and I went for a long order in a shorter expiry cycle. Now, and you see that order just got filled. Now, I might think that this might be a little bit aggressive. I don't know if the market will be trading there within 1 hour and 39 minutes. What I could be doing next is I don't have to wait until this option expires to see if that trade might be profitable or not. What I can do is I can raise a limit order and trade my position just like any other position in the market. It's not fire and forget. You can actively manage your position. And let me show you how easy it is to do just that. And just that, I just clicked here on my position. That position has 20 contracts, and I'm just going down now here to about 10 contracts. And if that market is moving for me in my favor and is trading around the strike price, remember, if it's trading around the strike price, I should be able to close that position for about, or the contract should be trading pretty close to 50. So I know if price retraces to that level, 50 is something that I should be able to get. I could close that position early on, no doubt about it. Another thing could be, well, I just opened that position here now for $10.50. If I just double my money here on that trade, I could scale out. I could close half of my position, essentially turning that whole position as a whole virtually into a risk-free position. I'm just trying to do that. I'm going here now for a price of about, sorry, I opened that position. Sorry. All right, let's just say I want to close that trade at about $22 per contract. Just 10 contracts, closing out of my position, and let's see where the rest is taking me. And I just opened that order. It's a limit order. It's a good till cancel order, which means that order is sitting there, and once the market is trading up to my limit price, that part is being executed when it finds a corresponding order in the order book, and I don't have to watch this market right now any longer. If that's my take on risk management and position management, how I want to trade that position. But you see how easy it was to open a short position, a long position, and now place a limit order in order to scale out of that potential long position here. Again, it's really just for demonstration. Right now, here, I don't see a trade for myself. Here, I would have been interested in that area for potential short candidate. Here, right now, it's really just for demonstrational purposes. All right, so that's the euro against the US dollar, and I would briefly like to switch back to, where is it? To nat gas, natural gas. Let me quickly start with oil. Oil has been going pretty much sideways. You can see on the monthly chart that we do have that slight tendency to move to higher prices. However, we are trading here once again pretty much against this level of 55, 56, something like that. Overall, more bullish momentum here on the monthly chart right now. You can see this series of rising higher lows. However, it's not really that roaring bull market yet. And looking at the daily chart, it's pretty much sideways. It's just going sideways and not really moving anywhere. Arthur is asking about the S&P 500. Arthur, I'm happy to look at the S&P 500 after the official part of the webinar, but thanks for the market suggestion. Happy to do it. So oil isn't really going anywhere right now. Nat gas, however, is looking here, at least on the daily chart, looks like a pretty soft downtrend. A little bit all over the place, but however, the momentum is more going to the downside, and not really any major clues coming from the weekly chart. The monthly also isn't that bearish, but the daily here, why not consider something here to the downside? And looking here at those lower time frames here, the 4-hour chart, for example, that looks pretty bearish here to me. And so, personally, I would be interested more into looking for some kind of bearish setups here. However, you could argue that we are here overextended on the 15-minute chart to the downside. We might see some correction here going more towards the 2922 level, something like that. So why not have a look at this chart here and just see how we could be trading those markets here right now with Nadex contracts. We have been looking at binaries before, and for that reason I would now like to look here at some commodity spreads and looking here at the 8 a.m. 2:30 p.m. Net gas spread. Now with the spread, let me start the other way around. With a binary, you're just looking at the strike price. If it's trading above the strike price at expiry, it settles for 100. If the underlying market settles below the strike price at expiry, it settles for 0. With a spread, you're now looking at a range, and the value of that spread participates within that range. So if you're looking here for a market, for example, if you think that market might be rising, and you consider that spread here with the floor level of 2,500 and the ceiling level of 2,900, 2.9, 2.5, 2,500, and sorry if that's not precise, but that's pretty much the way I'm trading. I don't care what the market is. I don't care what the absolute price level is. I want to see a good and nice chart structure. I don't care what the unit is. If this is US dollars per therm, or I don't know, or per BTU, or I don't care. I just don't care. I see that this is a market that might be going down, and I'm looking for a short opportunity. And for the position sizing, I'm looking here at those trade tickets and bring this exposure that I have with my trade in line with what I'm seeing here in my account. Sorry if that's not precise enough for you guys, but that's just the way I roll. I want to trade a good-looking chart and make absolutely sure that my risk management is spot on and in line. So if it's 2.9 or 2,900, I don't care. Coming back to our spread, 2.5, 2.9. This market here, or this spread, has an upper floor, a ceiling of 2.9, and the market currently is trading at 2.903. So it's currently trading above the ceiling. If I think this market might be rising, it doesn't do a thing for me to be buying this contract right now, because it's already trading at the ceiling. It's above the ceiling. It can't appreciate any more in value. However, if I think this market might be going down, this might be a very nice contract to consider because it's trading at the ceiling. I have the complete range here, those 0.4 points. This complete range is available if the market starts to decline. And so if I think I might be trading this market to the downside, I could be looking into selling this contract here. And you see, we're trading pretty much above the ceiling. My maximum loss on this contract is just $24 for 2 contracts. Now, bringing this one again in line with my account size, I could be trading 20 contracts for a potential maximum profit of 7,760. When do I get this potential maximum profit? If in 2 hours the market is trading at 2.5 or below 2.5, this is when the complete range of that spread has been working for me, has been available for me, and if the market closes at 2.0, I get this maximum profit. If it closes at 2.5, I will get this maximum profit. If it closes somewhere in between, I will get something in between. I will get something between my 240 loss and those 7,760. The value of that spread moves within that range. So if I think the market might be going down, I could be just replacing that order. If I think, however, that market might be going higher and I have to speed up a little bit because we're close to time, I will be looking now something where this 2.9 is pretty close to the floor level, and this spread here will do this for me. But why not look into a different expiry here? Why not look into yeah, why not look into this one here on the daily and just see, okay, floor level 2.9, this is where we're trading right now. So if I want to buy that market, once again, I can get in quite cheaply because it's trading at the floor. If it drops even lower, it's already as low pretty much as it can go. So the maximum loss I can have on that trade right now with one contract would be 15 bucks. Again, bringing this in line with 1% here of my account value. Again, this is just me. This is just my take on risk management in line with many successful traders. Your risk management plan might be completely different, and I could be just placing that order here as well. And we're good to go here to the long side. So once again, you've seen the thought process, which spread am I looking for? Again, you have to balance this with the time that is left within those options. In our example here, about 2 hours. Do I think the market might retrace? If so, how fast can it go? Where can it go? And yeah, people often ask, what is better, a binary or a spread? It completely comes down to your preference. Both are great, great products, and you have seen how easy it is to trade. Scaling out of those positions now would be just as easy as I've shown you with the binaries, so no difference there either. Chuck is asking a great question, but before I'm answering that question, and please by all means keep the questions coming, I'm quickly switching over to the last slide, and Arthur, I haven't forgotten about you and the S&P 500. For those of you who have to leave us right now, thank you very much for tuning in today and for attending today's webinar. I really appreciate you guys taking the time and yeah, being here again with us. I see many well-known names, so thanks again for tuning in once again. And yeah, if you haven't opened that Nadex account yet, please give it a thought. At least have a look at the demo account, practice, and even if you have that Nadex account and haven't placed any trades yet, a demo account, paper trading is a great way to actually get started and get used to the platform. I really like doing those paper trades because all those so-called fat finger mistakes, I don't know how the platform works and I've just bought instead of selling. All this can be trained, can be exercised with the paper trading account, and for those purposes, by all means, give it a go. Take that account for a spin. You see, it's easy, it's fun. Why not give it a try? If you have any questions, you see here multiple ways to be in touch with the good guys at Nadex. And yeah, if there are any more questions, please let them know. If you have any more questions for our webinar here, please let me know. So thank you very much for tuning in once again. And now let me switch back